Hey, my name's James Nicholson. Welcome to my YouTube channel. I've got some good news for you today. We've got two major lenders that are cutting rates. Not only that, with my crystal ball, I'm going to make a prediction on where I think rates are going to go in the next few weeks because there's been an update with the SONIA swap rate. That's an important rate because that's the rate that your bank borrows at. And if they get money cheaper, rates could potentially go down. If that goes up, then rates could potentially go up. So we're going to cover that, what's going on with that in this video. This is a second update this week on that. The last video yesterday said that that had gone down. So I've got another update on that for you here. So if you're new around here and you haven't done before, do subscribe to the channel over there and hit the bell notification. We've just hit 51,000 subscribers. And by subscribing, you'll get all the latest interest rate news, house price news, property investing tips, and much, much more. And let's get some views on this video. Your part in this is really simple. All you need to do is smash like, tickle like, do something to that like button. That really helps with the YouTube algorithm, and that really has helped the channel grow. So thanks to everyone that does that. So, rates are on the move again. There's a lot of unpredictability in the markets. And quickly, I'll just mention the American stuff that's going on and why that could impact interest rates here. So the American government has been shut down for 40 odd days. It's open again now, which is good. However, the US government are saying they might not be able to give us jobs data for October or inflation data, which is a little bit suspect, which you don't really want because America is really the most trusted data in the world. And so if they're doing something a bit underhand, then that's not great. Now, they're saying it's the Democrats' fault because the Democrats didn't give them the votes to open the government. I don't think that makes logical sense. It's in a computer system. You just update the data. Like, you can still get that data, but it is what it is. But what that does mean, if they don't provide any jobs data, what you'll see happen is you'll see that the Federal Reserve will have a tougher call on cutting rates in December. So that's not good, because we want the Fed to cut because the Bank of England stays fairly close to that, and that gives us more opportunity for a cut. So let's keep an eye on that. But what's going on this week? Let's talk about the 2-year deal at the moment. So 2-year deals on average last week were 0.59%. They've actually gone up this week, even though we've got some major lenders cutting rates. They have gone up, and that's not great, but it could just be some big, more expensive deals have come into the market, pushing the average up, because not many major lenders have increased rates, even though the average has gone up. What about the 5-year average at the moment? Well, the 5-year average is 5.03%, and that's the same as last week, so that hasn't changed. So that's not moving either way at the moment. But what has changed this week is the SONIA swap rate. And so that has actually moved down. So the SONIA swap rate, I'm just going to tell you here because I need the space on the board. The SONIA swap rate, the 5-year SONIA swap was 3.77%, and that's gone down to 3.52%. So nearly 0.25% there. And that means 5-year deals could start getting a little cheaper over the next few weeks. So that's something to keep an eye on. And the 2-year deal has gone from 3.69% down to 3.45%. So pretty much 0.25% there. So what does that even mean? Well, that means that the banks, they can get money cheaper now. And so that's good for us because they will start to lower rates for us. And so we'll see that over the next few weeks. And that's what we've got here. We've got two major lenders that are cutting rates. So who are they? It's HSBC again. I'm a little cramped in here today because in my office here, they're building, or not, they're doing building work, putting fire doors in. And there's loads of building stuff literally right there. So the desk that I balance this all on is really close. So it's not ideal, but it is what it is. So anyway, HSBC, their rate last week was 3.99%, and that has dropped to 3.93%. So not a huge drop, but it is a drop nonetheless. That comes with 999 in fees, 60% loan to value, meaning you need 40% equity or a 40% deposit for that. So HSBC have been slicing their margins and cutting their rates over the last few weeks. So it's good to see that continue. And I'm sure because they could have cut 1/4% here and still made the same money as last week, I think they're just doing it slowly so they can keep getting the publicity, because as a marketing standpoint, every time you cut rates, you get featured in all of the financial media, and lots of newspapers at the moment are talking about mortgage rates because everyone's struggling with the cost of living. So if you do one big cut, for example, 1/4% straight up, then that's great and you'll get your media coverage once. But if you do a little bit, 0.1%, 0.01% every few days, you'll get in the media multiple times, and that's really valuable for those lenders. So that's what I think they're doing here. Halifax, what are these guys doing? Well, Halifax is the biggest lender in the UK, and some of you were saying last week, I want to see some Halifax rate cuts because that's who you're with. And so they've gone from 4.17% to 4.02% on a 5-year. This was also 5-year. And the 60% loan to value. Now, one thing that they didn't say here was whether they had fees with this. So this could be no fees on that, or there could be some fees as well. Mostly the fees are around about £1,000 with most lenders at the moment, but they haven't in their press release said if there's any fees with that. So it's interesting to see. The average mortgage at the moment has gone up slightly over the 2-year deals. But I think what you're going to see next week is more lenders cut. I bet you'll see Nationwide again, NatWest, Barclays. These lenders will all cut because they can do that now. The SONIA swap rate is a prediction on where the market feels the Bank of England's going. So the fact that they've cut twice, it's gone down this week, that means that the expectation is the Bank of England is probably more likely to cut in December. Now, what the Bank of England will be doing as well is they will be doing lots of speeches and seminars and all that kind of stuff. And we listen to all of those here on this channel. And they will correct the market if that's not what they're thinking. They won't come out and say, look, we're going to cut in December. But if they're not likely to cut, they will say, we need to see more data. We need to see this. We need to see that before we cut again or make any commitment. So we'll see a correction from the Bank of England if that happens. So look, rates are moving down. That's positive. Last thing before you go, if you want to get the property accelerator, the enrollments are going crazy. We've had lots of new people enroll this last few days. I think it's only been open 2 days, hasn't it? So do join the VIP list. By joining the VIP list, you'll get access. You'll get an access email so you can find out all about it. There's no commitment by doing that. It just gives you early access to this, and that's going to be the best price. So we will be doing a Black Friday deal, but it's going to be more expensive than the VIP list. So if you join our list, that's easy to do. You just go into the description or the first comment, see the VIP link that's in there, put your details in, and then you'll get an email allowing you to have an opportunity to purchase at a much more preferential rate as one of our early access members. So do check that out. Do smash like, do subscribe. Do also check out all the other content as well on this channel, including this video right here.